My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey guys, welcome back. Another great episode. Today, zooming in from Kansas City, Kansas. Not to be confused with Kansas City, Missouri, we have a real estate entrepreneur who has quite an interesting background in real estate. Justin Moy originally got into real estate as an agent, as a broker, and then he got into more active real estate stuff as a commercial investor, co-GP, GP on projects. But these days it's kind of interesting. He's more on the passive side, and he's created what he's calling a work optional lifestyle. I love that terminology, work optional. And he is a passive investor, an LP, as well as a fund manager, raising capital for other people's deals. So Justin, welcome to the show.
Hey man, it's so great to be here on this side of the podcast. I'm usually an awesome listener and a consistent listener, but it's great to sit down one-on-one and get to chat with you.
Well, you're also a fellow podcaster as well. So there you go. You got your own show. So that's great.
Yeah.
So Justin, give us a little snapshot of what does real estate investing look like for you today? Mm-hmm. And what kind of projects, what kind of properties do you focus on?
Yeah.
What's the portfolio looking like? Just give us a taste of what that is.
Yeah. So I've transitioned fairly recently, maybe 3 years ago, to strictly being a passive investor in deals, being an LP. I've always known
now that you've gotten so much older.
Yeah. Well, that's the goal. I was always, you mentioned it before, creating work optional life. And that was always the goal to me. When I got into real estate sales, that was always the end game. So the only thing I knew when I was really young is I don't want to work till I'm 80 years old, like my parents are doing. My dad just retired last year. He just sold his restaurant. He's about 75 years old. And so I just knew I didn't want that. I wanted to be a professional investor. So nowadays I invest as an LP strictly. I always tell people, there's a difference between a good real estate deal and the right real estate deal. I come across great flips and rentals and ADU opportunities all the time, but they're just not the right deal for me. I have a lifestyle that I want. I love to travel. I love to be location agnostic. So I'm strictly an LP in deals. And as I continue that journey, I found a lot of people were saying, well, Justin, how do you do this? How do you pick deals? How do you pick sponsors? How do you vet deals? How do you do all those things? And so now, on the more active side, because most people realistically don't want to retire and do nothing, I raise money for deals and I do co-investments with other passive investors who want to piggyback off of my experience being a professional passive investor and get into deals after I've vetted them and looked at them and putting my own money and willpower behind them. So that's the high level what I do now. It fits my lifestyle better. It fits my goals better. The risk adjusted returns and the liability is better for me. So that's what I'm up to nowadays.
Cool. Well, that was a very good, concise explanation. I want to unwrap that a little bit, Justin. So you mentioned that your parents have been hardworking and self-employed. Your dad's been in the restaurant business. That's a tough gig. So congratulations to him for getting that sucker sold and being able to retire, because I think most of them go flat broke and bankrupt. I mean, it's horrendous. So hats off to him there.
Good.
So I'm thinking you didn't come from a background of big money. And I don't know the Kansas City market that well, but I'm guessing that either you were like the best real estate realtor guy on God's green earth to bank up that much profit to become a passive investor, but maybe walk us through where did you come up with the capital to become an LP?
Yeah.
And had you built up like a lot of that, or did you kind of just have reasonable lifestyle that you could swap things out? What is that?
Yeah. So I got my real estate experience. I grew up in the Bay Area of California. So you're absolutely right. It'd be hard to make the amount of money that I made as a real estate agent here. My average home sale was seven figures when I was, 18, 19 years old selling houses. And I just, again, knew that that's what I had. I had to make the bet on myself. I had to do something. But as an unqualified to do anything 18-year-old, what do you do? I was going to either sell insurance, sell cars, or sell houses. Those were
I think you picked the right one, man.
I think so. Yeah, looking back, it looks like it. But those were the options, and you're right. I didn't come from a family of money. I didn't come from a real estate family. We did well. I love people always love to hear a rags to riches story. We were far from rags, but it wasn't like hey, I just inherited my parents' portfolio. Or in the real estate industry, this real estate sales industry, very common for kids to inherit their parents' business. And I
Right.
always, had a little chip on my shoulder from those guys and
Of
girls. It was
course.
so easy for them. And I was cold calling all day, every day. But we all have our unique experiences. So yeah, I saved up a good amount of money doing that. And then naturally, kind of in between being a professional passive investor and fund manager, I was on the GP side, like you had mentioned. So I had a stint where I was underwriting deals full time. I was on the active side. I had a stint when we acquired properties. I was on asset management and on property management teams. So, all throughout that period, I'm
How
making
long
some
was that
money.
period? Like, and were you still
Oh,
working as a realtor at that time, or did you get into that?
I wasn't. No, I wasn't. This was it was a little bit after. Then when I had moved out here, one of the reasons I actually moved out to Kansas City was our holdings. Much more friendly environment to own rentals in. Kind of here in the Midwest, I really like that. So and then we just kind of stuck around like Midwesterners tend to do. So it was real estate, and then after that, after I realized, man, to buy these single family homes in any halfway decent neighborhood, I mean, you either got to build something in the backyard, an ADU, or you got to rent it by the room, or you got to put, I don't know, storage units in the basement and rent. Like you have to get so creative to get some cash flow. At some
Mhm.
point you got to pivot. And that pivot for me was commercial real estate. And so, I
Commercial, residential, or commercial what?
apartments, yeah. So
Yeah.
commercial
Okay.
residential, yeah.
Yeah.
And it just made sense to me. I understood that market well enough. I've lived in apartments like most people have at their point, so I kind of got it. So there was a stint where I was more on the active side, building up that capital, and then we had a couple of deals that we had exited, and of course, you only need a handful of those to go pretty well before, if you're smart with the money and you do what you want to do with it, then
Mhm.
you can lay off the gas here pretty quick.
Nice. Nice. Well, thanks for explaining that. So that's great. So you started investing passively. You had enough of the
Mhm.
active stuff. You say you like to travel a lot,
Yeah.
location agnostic. I like that. So tell me a little bit about transitioning now into
Mhm.
having your own fund and raising capital to bring people along for the ride.
Yeah.
Yeah.
Yeah. So it's one of those things, you know, I forget what they always say about it. If you're good at it and people ask you about it or something like that, do it. Something, don't work a day in your life, whatever the hell they say, right? Real estate was always something that I really, really liked. I
Yeah.
had a really big advantage just kind of getting into the field when I was so young. And it's something I'm truly passionate about. I love talking deals. I love talking about underwriting. I love talking about markets and why this one's good, why that one's not good. I kind of like criticizing operations teams and what could go wrong and so using my experience as an asset manager to kind of dive into due diligence on deals. And what I notice is that it was a valuable skill for people to learn. People have asked me if I will coach them or if I have mentorship programs, if I have courses. I don't have any of that stuff. But I found that it was a really in demand skill. And people would always ask me, like, can't you just tell me what deals you're investing in? Because of course they don't want to do all these things
Yeah.
themselves.
They don't want to do all that due
Yeah, to be a
diligence
passive
themselves.
investor, you do just as much work on the front end. You got a freaking second job. So I realized as enough people asked me that, I said, okay, well, let me just see if I can go actually negotiate stronger terms. Because now, instead of investing 50 grand myself, me and 10 of my friends are going to do 1.5 million or 2 million in this thing. So that's really how I make money as well, as I kind of arbitrage some equity from the operators. So the investors win because they get to skip the line. They don't have to do all the things that I do to find and vet great deals and operators and markets.
Yeah.
The operator wins because they get a really big check now instead of a bunch of little checks. And I win because I make a little spiff of equity, kind of an arbitrage of equity on the front end. And I'm loving what I'm doing. And I get to
Yeah.
bring other people along for the journey with me. And so it was really fulfilling to me to have that role. And so I've really embraced that and I've loved it.
So logistically, how do you structure this
Mhm.
as a fund of funds? Like, what does that look like on the
Yeah,
back
yeah.
end?
Fund of funds is what most people will call it, an SPV. Some people, if you're listening and you've never heard fund of funds, SPV is another similar one. So,
So maybe
essentially,
for folks who aren't familiar, maybe explain what that means.
yeah, yeah. So a fund of fund, FOF or SPV is a special purpose vehicle. Essentially, if there's a group and you've looked at syndicates before, and a group is raising, $10 million for an apartment building, they're going to go to investors, maybe $50,000 minimum at a time. Well, my group is going to come in. I'm going to say, hey, I like the deal. I think I could actually bring you 2 million instead. So instead of raising $50,000 at a time, you're 10 million. I'll come in. I'll be 20% of the equity. You just got to give us better terms, and then we'll work those things out. Now, once we are agreeable on those terms, I go to my investors or the people who have contacted me and wanting to get into deals, and I say, hey, I found a good deal. Here are the terms. Here's the business plan, the projection. Here's why I like it, the risk factors, all those things. And then if you like it, you invest essentially with my fund. You invest in my bank account that I open up for the fund for just that specific property. Then once I crowdfund all the investment, I send that money to the operator as one big check. And we're all kind of in this ride together. Think of it as one
Mhm.
company that just invests in these deals. So logistically, it's very simple for the investors. There's really no additional administrative burden or any issues with it. It's just essentially consolidating all of our money in one entity in one bank account, and then I send that off to the end bank account instead of everybody just wiring individually.
Yeah. Okay, that makes sense. So that's very, very convenient for both your LPs, your investors that are
Yeah.
invested with you. Very convenient for the sponsor or the head
Mhm.
GP that's doing the deal because they get a big chunk. And
Yeah.
it sounds like it's a good deal for you. And I want to kind of understand that a little bit. It sounds like it could be a good deal for you, but it also sounds like a paperwork nightmare potentially, because if you've got 10 or 11 people, now you got to report to them. And if the head
Sure.
guy's not reporting to you and they're coming after you, and then there's
Sure.
tax stuff and there's reporting and there's all this kind of stuff. So how does that
Yeah.
side of things work, Justin?
Yeah, it's actually a little bit more simple than you might think. One of the criterias too for operators that I would personally invest in and ever invest in with the fund is they have to have some sort of system built out. So if I'm chasing you for updates and for financials, I mean, that's going to be a pretty big issue. And chances are we've kind of vetted these things out before. Now, it's real estate, things still happen. We've had people leave companies that we've invested with and things have gotten a little bit muddy. We've had people pass away in key positions. And so we've had to kind of ride some of those headwinds. But you adapt. One thing that I like to say is all of my investors I know by name and face and personal phone number. It's it's a lot easier to walk them through the process and say, hey, maybe there was a death in a key position in the group, so we're not going to get updates this month, but they're working on it. There's always going to be things to take care of, but having that personal connection and relationship has helped a ton. And you mentioned tax burden. Yeah, and the CPA gets to make a little bit more money because they have to break our tax stocks up a little bit more. So you might see a little bit longer of a delay from getting your end tax stocks, but from a risk adjusted return basis, most investors don't mind waiting a couple extra days for the types of
Yeah.
returns that we're able to get.
And you get to outsource that to the CPA instead of figuring it out
Oh
yourself. So
yeah. Oh yeah. And you don't want me doing it. So
excellent. So what does the fund kind of look like at this point in 2025?
yeah.
How much capital to be raised in there? How many what would they be? Co-LPs or
Sure.
investors do you work with? What does that kind of
Yeah.
look like, Justin?
What's funny is I've never had these goals to be this massive fund. Like I mentioned, I know every investor by name and face, and that's the way I want it. You're in these illiquid investments. I don't want somebody who I don't know to be along for this ride.
Yeah.
So, last time I checked capital raise, we're just shy of 10 million. I think we might even hit that with a deal that we're working on right now.
Nice.
But I'm not a big AUM guy. I'm not a big equity under management guy. It's
It's
there's
kind of
some
vanity
vanity
numbers
metrics.
anyhow, as far as I'm
Yeah,
concerned.
they're vanity metrics. Somebody can invest 50 grand in 200 unit apartment building and say 200 units, add
Yeah,
it to their
200 doors.
portfolio.
Yeah.
It's it doesn't really matter. And then for the journey, there's been about 100 of us at this point involved in a pretty good capacity. So like I said, I've always wanted to keep it fairly small and intimate. I don't have any plans on blowing up and being this big conglomerate. I love the way the business is structured now, and that's the goal for me. But I'm not really blown away by AUMs and equity raised. It's all about the quality of the equity and the quality of the deals. And a lot of times that means you're not doing a lot of deals some years. So that's important to us.
Yeah. Well, it helps you be able to be footloose and fancy free and be
Yeah.
location agnostic as well.
Yeah.
So tell me a little bit about your podcast and why you decided to get into the whole podcasting world. I'm always interested in that.
Yeah. So I know we were chatting about this a little bit before we got started. The podcast started, it's called Passive Real Estate Strategies now, but it wasn't always that. It started as a way for me to get in front of these damn operators that are so good and powerful and big at what they do that it's hard for just, me to get a meeting with them. So I started a podcast to get in front of people that I wanted to get in front of selfishly. And then it's kind of evolved now into a resource for prospective passive investors where you can learn about due diligence on deals. You can learn about the types of deals that I'm seeing and why, some of the market adjustments that I've noticed. I just published an episode about so far this year. We've analyzed 126 deals. What are some of those trends from Q4 to Q1 this year? So it's like a peek behind the scenes of what happens from a professional passive investor side. And there's a lot of really practical knowledge on due diligence and tips. All the episodes are a couple minutes long. It's usually just me talking real estate on there and talking about deals. But if you're a passive investor, there's really not many resources out there to help educate you on how to pick good deals, how to pick good operators and good markets. And so that's what that podcast aims to be, is for that LP, that passive investor who wants to strictly invest passively, and take that role in the deal.
Very, very cool. Smart how you got into that. Yeah, I found that a podcast is a great way to connect with people that
Yes.
otherwise might not give you the time of day.
Yeah, absolutely. I recommend it. And plus, like I said before, we both love to gab on real estate, and our loved ones are sick of hearing about it. So we have to have other mediums.
It's fun, a great way to talk with other, as I affectionately call us, real estate nerds.
Yeah, exactly.
Well, this has been good, a lot of fun, Justin. If people want to find out more about you or perhaps connect with you, where should they go? Where do you prefer to meet folks online?
I'm super active on LinkedIn. Every single day, 7 days a week, I'm on there. Holidays too. I love that platform. So if you look me up, Justin Moy, it's Moy. I should be the only guy that pops up, hopefully, but I'm the real estate guy on there. So connect with me on there. And like I said, it's going to take me one day at most to see your message. So it'd be great to connect.
Wonderful. I got a little PS here. So you're on LinkedIn 7 days a week.
Yeah.
Why is that? And so is that, some people love Facebook, some people love Instagram,
Sure.
some people love TikTok and Twitter, X. Why so much focus on LinkedIn?
I just like the community a little bit better, I think. I post a lot about real estate on there. And one thing, I post a lot of text heavy stuff. So, if you got TikTok or something like that, you got to dance nowadays to really get people to see your stuff. And so to me, it was an easy platform to produce a lot of content and daily thoughts on. I've met some amazing friends on that platform, and really in terms of size of social media platform, it's still very, very small relative to the others. And so it's kind of interesting. You get to know other creators fairly intimately, just given that there's not too many. So there's a couple of benefits to it that I've really liked. And, again, the type of content that's able to produce on there, being more text heavy, has helped me a lot. Again, I don't like to do a lot of dancing or nothing like that. So
Fair enough. Awesome. Justin, this has been a lot of fun. Thanks for being on the show.
Awesome, Dave. It was so great to be here, man. Thanks so much for having me on.
All right, everybody, take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.